Seeing more downside since our last update in Ethereum Classic. And as a matter of fact, I've actually exited all of my short to intermediate term crypto positions, with Ethereum Classic being no exception. And however, this doesn't necessarily mean that I'm a bear, that I think we're going to have more of a crash. As a matter of fact, I think that Ethereum Classic may be nearing the bottom of its own structure to the downside. This is our 2-hour chart, and I was counting this entire thing as a conventional C wave down. We have a first wave down, second wave up, third wave down, fourth wave up, and a fifth wave down. This is a little different from some of the other altcoins in which it doesn't really look as much like an ending diagonal. We don't have the fourth lap overlap in the first wave, fourth wave overlap in the first wave as much. It could still be a diagonal. Good thing about ending diagonals is that they're the end of the pattern, and you typically see a sharp reversal. So we'll look into that in a second. This is, of course, the linear chart, and we got some supports right below. We could see this thing extend down to 1230, maybe 746. I really wouldn't want us to go any lower than that. And there are some key supports in between that point and here. So we're going to shift over to the logarithmic chart in just a second. And just to note, of course, I'm going to have a link in the description below so that you can follow along with my logarithmic chart. So on the big picture, the Ethereum Classic had its rally that started along with from the everything crash in March of 2020. And we had quite a parabolic blow off top, which I'm calling a first wave. With the depth of the correction, I'm really calling this a second wave. This looks like a big zigzag. Could be a fourth wave. Maybe we have a fifth wave coming, but my primary is that it's actually a three-wave pattern for a larger second wave. So what we're looking at here is that our green pattern is still the primary, and that sees this whole correction from May all the way down to June of 2021 as an A wave. The whole rally into the fall was actually a fake out B wave rally, and it's more prevalent, it's more clear and more standard looking in Ethereum Classic than most other cryptocurrencies. It looks very much textbook ABC. And I mentioned in my EOS video that some of these altcoins were actually warning us of a bigger impending crash than Ethereum and Bitcoin did. So maybe my hypothesis was incorrect. Maybe it's altcoins that lead the sentiment, and maybe the big coins follow. Who knows? But at any rate, we look like we're nearing a bottom. We look at our MACD. If I scoot this thing over, we have what we call divergence. We had that big spike down on December 3rd. That really pushed the MACD down. However, with the lower low, we're not seeing as low of an MACD. So that's a good sign that we're at least getting close to a bottom, if not already finished with the bottom. We have an alternate pattern. We actually have two alternate patterns here. So I'm going to get rid of this MACD view in just a second. So we have a support right below, which is our 2106 support. And that really is, it's significant because that's the bottom. That's the 2.0 extension of what we're calling the 1 and the 2. You typically don't see an impulse go below that or beyond that. It would be very stretched. So we could spike below that briefly and then reverse right back. However, if we go all the way down to the next Fibonacci level, which is 1696, something like that, that tells me that this whole thing may be a larger, maybe a diagonal, but a larger structure down. That is what the purple structure is. That tells me that this spike down December 3rd was actually a zigzag first wave. And then we had a small second wave bounce, and we're in the middle of the third wave right now. That would be a diagonal because of the internal subwave structures. And we have similar corrections going on in other altcoins in which it looks much more like an ending diagonal. As a matter of fact, in Bitcoin and Ethereum, our alternate pattern is that we have a big bounce coming pretty soon, and then we're going to have more downside. So it's a possibility. It hasn't been validated. I don't see it as a huge possibility at the moment, but that's fine the way it is. Now, there is one other alternate pattern, and that is that we have that spike down. That's what the red pattern is. So really, there isn't much difference between our primary green pattern and this alternate red pattern. This is just calling for maybe like a spike extension down. You sometimes see that at the bottom of a correction. That's where the fear peaks. And well, you'll see some divergences. You typically see a dropping in volume. Volatility sometimes drops despite the pullback going a little bit deeper. That could be a great buying opportunity, which I'm going to touch on just a second. Now, other than that, if we are done with this correction, we do have this rough projection of where the green first wave would be, or first subwave. This hasn't changed since our last update that much. As a matter of fact, this is going to go a little bit lower because we've pulled back a little lower since that. So I'm going to adjust this right now. So we could go as high as from 99 all the way up to 255. That would be your standard range for a subwave 1. based on our larger 1-2 structure. So I'm going to move these down. In order for this pattern to cement itself as the primary, we need to see a sharp reversal very soon, and we want to see a 5-wave impulse up. Now, whichever pattern we go with, we want to see a 5-wave impulse up no matter what. So it'd be pretty breathtaking, neck snapping. If I see any kind of development like that, I'm definitely going to be a buyer. As I mentioned, I did get out of my positions with the hopes of buying the dip. There is a chance we go lower, as I mentioned, with the alt patterns, because Bitcoin and Ethereum do have a lot more downside left than Ethereum Classic. Ethereum Classic has a bit more cushion than something like EOS does. I mentioned some of the other altcoins are getting very close to invalidating their entire rally structure. That would be 322 for Ethereum Classic. We're nowhere near that right now, so I'm not seeing that as a strong possibility at this moment. So like I said, look for the 5-wave impulse, look for a 3-wave correction down, start buying. The last thing I want to mention is that I'm going to have my own strategy for buying. I buy the dip, but sometimes we get emotionally attached to our favorite cryptocurrency. If there's any good example that all cryptos follow the same sentiment, that it's all tied together, they all correlate, this is a great example. If this doesn't convince you, then I don't know what will. Maybe one of the cryptos will outperform some of the other cryptos. I don't know. So I recommend typically buying 7 to 8 cryptos at least, just because you don't know which one's going to outperform. It's just like investing in speculative tech stocks. You may have bought Amazon and benefited, but you may have bought a lot of other stocks that crashed and went to zero. So you never know what's going to happen to cryptos. That would be my advice. I'm going to be putting out more videos, updating as we see inflection. If I start seeing more divergences, more signs that the bottom is near or it's over, look out for my videos. So don't forget to subscribe. Until next time, thank you for watching and happy trading.